Okay, welcome everyone to our brand new trading week. We're live to you from Lagos, Nigeria's financial capital. Let's get the show started. I am boasting for you on the program today and for the rest of the week. Let's see what's in the news. One of the most interesting months is finishing, but what do the markets look like in the month of March that we're getting into the Nigerian Stock Exchange? This is what we gathered over the weekend, that the Stock Exchange is set to list $1 billion federal government bonds that was floated at the global debt market about 2 weeks ago. That bond will be listed on the London Stock Exchange, and according to the official press statement a fortnight ago, the bond will be listed on the Nigerian Stock Exchange as well as the FMDQ OTC Securities Exchange. We got words over the weekend that the NASD will be listed the $1 billion bond, Eurobond, this week. No date's been fixed for that yet. We'll try to sniff around for that. This is going to be very historic for the Nigerian market. The first time in Nigerian history and the history of the stock exchange to admit a dollar bond floated by the Nigerian government. Meantime, the flotation of the green bonds that was in the news all through last week is also expected to be at the marketplace in the new month, going by the calendar that the Ministry of Environment initially set for it. We'll keep an eye on that flotation as well. Meantime, there is no word yet from Nigerian banks, in particular the Tier 1 and Tier 2 banks, on their fourth quarter and full year 2016 earnings. This is one of the delayed earnings from these banks, and we're now 2 months into the new year. Not even the early birds are reported yet, talking about UBA, Zenith, GT, and Access. Meantime, analysts and traders see Naira-dollar relationship around 400 in the new month that is going to start in the next 48 hours. What else do we have in the news this morning? The central bank will sell 310.23 billion Naira, beg your pardon, the treasury market on Wednesday to kick off the month of March. Tomorrow will be an interesting day. By this time in 24 hours, we'll be kicking off this 1.5-hour Channels Television LCCI Roundtable live panel and discussions conversation centered around business perspectives on the economy, the focus on the Lagos Chamber of Commerce and Industry. That will be live here from our studios from 10 a.m. to 11:30 tomorrow morning. You want to join in that conversation, and if you have any comments or questions to discuss with these largest commerce and industry chambers in Nigeria, we'll roll that out for you later. Look at the economy and the markets. The month of February is ending without the launch of the National Economic Recovery Plan, unless that happens between today and tomorrow. We're getting into the month of March. By Wednesday, we're yet to have word from the Nigerian government when this National Economic Recovery Plan will be unveiled. Meantime, tomorrow will be very key as well. I've looked at a very busy Tuesday, isn't it? The Bureau of Statistics, that's the MBS, will release the fourth quarter GDP for 2016 and the full year numbers. That will be coming from Yemi Kale and the rest of his team in another 24 hours from now. So we're starting the business week, and of course the legislative chambers of the National Assembly will be screening the budgets for 2017. The proposals submitted by the executive branch will continue in the new week and into the new month. We expect a speedy passage of that fiscal appropriations as soon as they get down to business. A look at what is going on now at the securities market. The SEC over the weekend says it shut down an alleged Ponzi scheme operator by the name Yuan Dong Investments. According to sources within the Securities and Exchange Commission, this firm operates in Abuja, Lagos, and Kaduna. And the officers, according to sources within the SEC, were arrested over the weekend, and they are now in police custody in Abuja. Their offices have since been shut down. This is one of the latest in the Ponzi schemes that the Securities Commission has laid its fingers on, operating investment schemes, asking Nigerians to invest thousands and thousands of naira in return for certain returns that the SEC considered illegal, as the operator did not register those investments with the commission. So keep your eye on that. In case you've had money in there, you may need to make a phone call. Meantime, one very interesting story. The amount looks really small, 1.5 million naira, but the Securities and Exchange Commission says an investor protection, its investor protection fund has issued 1.5 million naira check of recovered money to a retail investor, a Nigerian by the name Samuel Okeje Ikechukwu, who is resident in Italy, whose GT Bank shares were illegally sold by a market operator, Cashville Investments and Securities. The Securities and Exchange Commission statement says the investor has since been repaid 1.5 million naira of those shares that were illegally sold when he filed at the conclusion of a complaint he filed at the Commission sometime in 2015, just about 2 years ago. Okay, let's do a quick review of the market last week. And of course, you know where the biggest story was last week, all around Naira-dollar relationship. A massive one for the Naira. We've never seen this since November last year, when the Naira moved massively as the Mephiles put rapid fire against the market speculators. The Naira gained 11.54% at the street level last week, when the central bank sold north of $500 million to the market. Take a look at where the currencies market finished off on Friday, and this is where the conversation with Boniface Chizie, who is a policy analyst and economist, will be in the next 30 minutes here on the program, or less than that. Boniface Chizie will be talking to us about his views on what we have at the currencies market. So we have that currency conversation in a few minutes. But look at where we were at the Interbank OTC, 305.50 at the Interbank, unchanged throughout last week. Naira pound, Naira gained about 0.75% at 395.90 against the pound sterling. And against the supranational euro, that was 0.44%, 331.12. Look at the street market that some folks call the black market. The Naira gained on all the numbers. You heard about an 11.4 already, 460. Some traders and analysts are looking at 400 before the end of the week and in the new month, March. Naira, British pound, 575, down from a massive 620 Naira to the pound. We're now 575. Finished Friday up about almost 10%, 9.45, and against the euro at 483, up 11.93. That's tracking the dollar-naira relationship. You can see the double digits there for both the naira-dollar and the naira-euro. The stock market took a little bit of a gain last week, thanks to the consumer goods and a paltry gain by the insurance subsector of the market. The banking sector, we haven't seen any of the numbers from 2016, so the market took a bit of a sell-off from there. The banking sector was down about 0.75%. The consumer goods did a massive 4.1% in the week. Insurance gained 0.33%. Oil and gas was down 2.5%. Industrials lost 2.83%. The shares that rallied the week, Nigerian breweries, Guinness, Nestle, all the big boys. So you're looking at the all-share index where we finished on Friday. The market cap still below the 9 trillion naira, 8.73 trillion. Look at the volume for the week and the value, almost 10 trillion naira, a massive trading week, 12,468 units of shares. At the unlisted securities market, and that's why we're going to the NASD OTC market, the unlisted securities index, or the USI, finished flat, 588.11. The market cap sitting at that figure, less than 400 billion. In volume terms, not quite significant, 264,943 for the week. At the fixed income markets, both bonds and treasury bills were a little bit tepid in the week. Of course, a bit of a sell-off at the short end of the market as banks grappled looking for cash, to take position for that massive foreign exchange sale by the central bank. So that hit the treasury and the bond market a little bit. Take a quick look at a bit of a snapshot. The Friday market there from the FMDQ OTC Securities Exchange. You can see the number of deals on the right side of the TV screen for the FGN bonds. 4 of them we tracked, and you can see the number of deals very paltry. In Naira terms, that finished up in total for that space Friday, 50.17 billion Naira. Flip over to the treasury bills market, and it's not significantly different. But of course, you see a more massive sell-off there in short end treasury bills, March 2017, for those dated papers. And you can see the total, 328. Those folks were the most hit because of the treasuries auction. Okay, let's get a bit of a sense of this market. We finished on February. Let's spend about 5 minutes with Eromozele Aziba, who is one of the investment research analysts at Afrinvest, and he's joining us for this conversation this morning. Eromozele, good morning.
Good morning, Boston.
Thank you very much to have you on the program. I put together, if you look at the month of February, again, what do you think? What are the high points of the market for you this month ending tomorrow?
So what we've seen is the trend which actually began in January was continued in February. Looking at the equity side of the market, the index was down about 3% in February, as the earnings releases that came out during the month were rather unimpressive, which might not necessarily have been too surprising given the challenges that we've been facing in the economy. So as expected, companies' earnings were pressured, and this further weakened investor sentiment. And we saw a lot of sell-offs during the month, and hence the negative performance that we have for the month. Looking at fixed income market, we still had a lot of interest in that space. Given the weakness in sentiment for equities, a lot of investors have turned to the fixed income market. So we've seen rates at the in T-bills and bonds also rise within this period. In the T-bills market, we have rates currently at about 18.6% for February as at last week Friday. While in the bonds market, we've also seen yields rise to about 16.7%. So we've seen a lot of investors continue to take advantage of the fixed income end of the market, and we expect this to continue as appetite for equities remains weak.
Eromozele, let's look at it. Do you think earnings has anything to do with the stock markets, the equity side of things in February? A few of the earnings were really nasty, as it were. If you look at the big consumer goods companies, Guinness, Nigerian breweries, and the rest of them, then you have the banks still holding the end of no-show until now.
Okay. Well, like I said, the expectation for companies' earnings was already rather weak, given the challenges that we're facing in the economy. But this further worsened the investor sentiment towards equities, as the poor earnings releases were a key factor in driving performance. If you notice, immediately after each company releases their results, if it's really bad, you see massive sell-offs in the stock. For instance, Nigerian breweries, even though there was an expectation of a weakened performance, given that the FX challenges we're facing have pressured their results, we saw massive sell-offs in the stock during the month. But following the release of their results and the proposal of a 2.58 kobo dividend, we saw investors take advantage of this, and that was the major driver of the rally we saw in Nigerian breweries last week. So yes, we can say that investors have reacted to earnings releases. But looking at the banks, I mean, especially for the tier 1 banks, we expect them to present quite impressive results, especially due to the increase that is expected from their non-interest line due to forex valuation gains. So we believe that we might actually see some improved performance once these Tier 1 banks' results start to trickle in.
Okay, Eromosele Aziba, thank you very much for weighing in on this conversation for us today, starting the brand new business week, taking us into March in the next 48 hours. Thank you, Eromosele Aziba, one of the investment research analysts at Afrinvest. The next 1 hour will be very interesting. Dolakoni from Ecobank Research is discussing the energy mix conversation with us in the next couple of minutes. Stick around, we'll be right back.